Welcome to the Market Roundup with Winston and Felix, Winston being the smartest investor I've ever met. What's going on today? Well, the market absorbed some bad news quite well today. We've got some pretty nasty data out today on manufacturing, the level of overboughtness of the S&P 500, and generally China news. So China reported shockingly low GDP numbers, shockingly low retail numbers, shockingly low investment numbers, and a housing market that's a problem, and therefore that construction is a problem, and demand for commodities like cement and steel much lower than expected, and therefore China cut their interest rates unexpectedly. Now they can do that because their interest rates are actually pretty high, just like this ear is rather large. And why does the market not react to that? So Chinese stocks went down a little bit earlier in the day, and then Winston thought about it. He thought, you know what, I think everything's going to rally. Why does he think that? Because what it means is that the recession is more likely, if you believe it still isn't here. Well, according to President Biden, it isn't. So, you know, it must be true. Surely they know that stuff from the White House, don't they? And what it really means is that the Chinese lack of demand is going to make this recession come faster and deeper. So we like that because it means it's less likely that inflation will remain much higher, because oil prices came down like 3-4% today because there's less Chinese demand for them. Simple supply-demand equation. Now, none of that particularly worries me. In a way, it's all kind of good news. But what does worry me is Li Auto's earnings report out today. Why? Because they've guided for essentially a flat growth number for the next quarter. They're basically saying, look, we're going to make about 10-15% more cars in the following quarter than we did a year ago. And that implies that supply chain problems are alive and well, and that doesn't spell out good news for the likes of NIO and XPeng and so on, and even Tesla, of course, because everything is tied into the same supply chain. That does worry me for the NIO earnings in about September, I think. So be cautious, diversify. And the battery died. There we go. So what were my rounding up thoughts that you missed out on unfairly? Well, one was to show you that I made $1,000 today, not to gloat, but just to be transparent. Mostly on a Microsoft trade. I actually only set up 4 trades yesterday, which were all market neutral, and the Microsoft trade today particularly green. But the other 3 are also going to deliver us another like $400, $500 or something. So that was all of the day's work. And we're continuing to pile up money, basically. That's just what we're doing here. So we made a 23% return so far in August. And if you don't believe me on that, I can scroll up and you can see all of the trades. Or I could also go into the brokerage and you can see the transaction history. Sometimes people are, there you go. You can take screenshots of this if you like and work your way through it. For those who are dubious, and we've had a couple of really nice big wins here. Square was one, Microsoft was one today. But there have been quite a few others. But generally, we don't aim for the big wins. We aim for the little wins, consistent, continuous little wins. And that's really how we make money. And in this kind of a market, what I'd really recommend is, first of all, understand what you own. felixfriends.org/SP500. It's a free benchmark. Top 500, well, all 500 S&P 500 stocks, all the fundamental numbers. And that's important that you understand what you own and what those numbers mean. If you don't know what those numbers mean, learn it. I have programs on that on the stock investing side. Do check that out. And if you want to simply make extra income, because income is beautiful because A, it gives you freedom. You can choose not to go to work, or if you go to work with a smile because you don't need to. And secondly, you can take the money, you can reinvest it every week. I buy stocks every single week. I absolutely love it, no matter what happens in the market. Now, in this kind of rebound rally, I'm still buying stocks, but I am also aware that it could go down again, right? It could go down again if oil prices start shooting up again, for example, and inflation is possibly a fake head. Maybe it is going to start rising again. In that case, commodity prices would certainly do that, But in the long run, it doesn't really matter all that much. Now, what does matter is whether you make money. We've just achieved this enormous, wonderful milestone of 2,500 students in the academy. GOAT Academy is what we call it. And it's where we teach you how to make money as an investor. So to learn from me directly and also with my amazing coaching team, go to felixfriends.org/coaching and learn how to build these returns that I'm getting every single week. I keep showing it to you. I've been showing it to you, for a year now or so, and you can see it's very consistent. And why is it consistent? Because we do the opposite of what most retail investors do, right? So most retail investors buy a call option hoping something's going to go up, 50-50 chance at best. They buy a leap option hoping something is going to go to the moon in 2 years' time, probably about a 15-20% chance of that happening. Very, very, very low probability trades. They're basically the gambler. They're basically at a slot machine and are hoping one day I'll get lucky. They might. I hope you do, if that is you. But it isn't a strategy. It isn't, you're never going to find an investment banker who buys leaps or sells covered calls. There's nothing particularly wrong with covered calls. It's just not particularly profitable. There is a better strategy. I was very lucky enough to learn that from options traders, the real guys who really make a lot of money. And that's the strategy that I use and that I've adapted and adopted over the last 10 years. And it works. And I've got loads and loads of students it works for. And we only do trades that have an 80 or 90% probability. So we could be really, really wrong on the direction of a stock and we still make a lot of money. And that's really the point with this. So check it out, felixfriends.org/coaching, and I'll stop rambling now. And I wish you a beautiful end to the day, wherever you may be. And thank you very much for tuning in.